Hello guys, and welcome to the first video of Jack's stock picks. So today we are going to be having a look at ticker symbol SBE, which is Switchback Energy Aquisition. So of course this is a SPAC which will be reverse merging with Chargepoint. So you might be asking, what is Chargepoint? Well, it's an EV charging network. The stock SBE is currently up 55% this year, but after hours, due to current circumstances of Donald Trump, it is now down 2% after hours. So what does this mean for us? Well, I think it's going to create a great buying opportunity in for this stock. Let's take a look as to why we should buy this stock. So as we know, EVs are becoming more and more popular. Lots of countries are going to start restricting purchases of internal combustion engine cars. This will then mean that people will have to start buying either EV cars or hydrogen. With the help of Tesla, of course, EVs are now becoming more and more popular, with many companies such as Ford, BMW, Audi, Renault creating EV cars for the market. So then, to charge these cars, we obviously need charging points. This is where Chargepoint would come in. Chargepoint are an electric charging network replacing current petrol stations and different fueling stations. So before we take a look at SBE stock, we need to first look at the fundamentals of Chargepoint as a company. Through some research, we can see that they have got some competitors. However, Chargepoint have 7 times more of the market share compared to their closest competitor, which is SEMA Connect. Their other competitors include Blink, Shell and FreeWire. What makes SBE/Chargepoint a promising prospect is their proposed growth over the next 6 to 7 years. We'll now take a look at that on screen. So if we take a look at their investor presentation on Switchback Energy here, we can see that they say that their winning formula is going to be the fact that they have obviously the hardware, which is their charging points, then their software, which is going to be a recurring payment system so that you can use their charging points, such as what like you'd get with Netflix, and then obviously their services. As you can see here, they have many large customers such as 3M, Netflix, NASA, Facebook, Microsoft, Disney, a lot of big customers there, and that's good to see. It means that they're going to continue growing. So Chargepoint have already shown that they can expand within their current customers, and this is to do with the recurrent payments that they get from these customers. You can see here that over a 7-year period, 49% of their income is due to recurring payments. So if we look at this slide, we'll see that by the end of 2026, they expect to have $2 billion worth of revenue per year. So what does this mean to the stock price? SBE is currently trading at $15 per share, which means approximately a 5.89 price to sales ratio. So if we were to go by their $2 billion revenue in 2027, that means their stock price would be $160, which would be just over a 10 times increase over the course of 10 years. To me, it's a no-brainer investment. Currently I have 60 shares in SBE and will be expanding that portfolio over time. So let me know down in the comments, will you be investing in SBE or have you already? How many shares have you got? Let me know. So guys, that concludes our video today. I think we can all agree that we'll be buying more Chargepoint stock in the very near future. Don't forget to hit that like button down below. It really helps out the channel a lot and it makes us grow. And subscribe to continue watching more videos from Jack's Stock Picks.